How should we strategize for the future market of Bitcoin? If you're interested in knowing more about this, please keep watching. You are all welcome to join our team in WSOT, which is organized by Bybit. Currently, in the global ranking, as you can see, I sort it by number of members. Also, it involves all language divisions. We've dropped to the 9th position. We hope to regain the 8th position with your support. Among the Mandarin teams, we have the highest number of members, surpassing the second-place team by several hundred people. According to the competition rules, having more members in a team provides a competitive advantage. Last year, we won the championship in the Mandarin division when the competition was concluded. So, we invite you to join my team and fight for the $8 million prize pool. Now, let's return to the Bitcoin market analysis. Looking at the daily chart, if we zoom out on it, we can identify a particular pattern forming by further zooming out on the chart. This is overzoomed. Let's observe this. The chart is a work of Jesse Livermore. You must have read one of his books. Although his reminiscences of a stock operator mainly focuses on trading psychology rather than technical analysis, it's still worth exploring, even if you are familiar with other theoretical works. Let's take a look. Examining the current situation, it appears to resemble the chart drawn by Livermore in several aspects. Let's take a look at the similarities here. In this hand-drawn chart, there are several key points that are highlighted. Let's check them out. At the top of the chart, the headline reads Livermore Speculative Chart, where speculative means related to speculation or trading for profit. Livermore, throughout his approach, believed that he was engaged in speculation. No doubt, trading is speculation. He didn't invest. It's important to recognize and understand the nature of our actions. Now, turning our attention to his annotations, he mentions the all-important action of Stock A. It means all the important actions exhibited in Stock A. He marked each of the important actions with a point. As you can see, the points here start from 1 to 8. These points represent what the author refers to as important action, actions that are worth attention. Below, there is a widening wedge pattern, referred to as an accumulation cylinder, which means a cylinder of chip accumulation. Then, with widening mouth, suggests an opening mouth. As we observe the upward movement, we can see that the oscillation amplitude increases over time, signifying that the boundaries of this pattern are expanding, consistent with the chart. Moving forward, we need to verify if the so-called important action mentioned by the author indeed matches the actual price and volume movements. Of course, in technical analysis, it's crucial to analyze both price and volume. Examining only the expanding accumulation cylinder in terms of price is not the right way to do it, because we haven't taken volume into account. To get a comprehensive analysis, we need to consider both. If we look solely at the price aspect, the pattern does resemble what the chart depicts. Let's go point by point to compare. The volume, he says, is the change of volume. Look at the first point. I think the first point is here. So, the price movement is a structure like this. Starting from here, this is point 1. Then, point 2. Point 3 after a retracement. It's followed by point 4, point 5, point 6, point 7, point 8, and point 9. Well, the last 2 points will be discussed later, since they haven't appeared yet. Now, let's see if the performance from point 1 to point 7 matches the pattern described in the chart. Let's assess it. At point 1, you'll notice it marks the lowest point, and the volume at that time is relatively high. You can see that the volume at point 1 is slightly higher. It is undoubtedly accurate, because it was a bottom testing phase. Moving on to point 2. As the price surged higher, the volume also increased. Both points 1 and 2 align perfectly with the chart's description. Well, 4.3. It experienced a decrease in volume. Why? Because this point signifies a retracement within the ongoing uptrend. Comparing it with points 1 and 2, we can confirm that the volume indeed reduced at point 3. The volume shrinks at point 3. So, you can see that when the price hit point 3, the volume at point 3 indeed shrunk compared to the area nearby. At point 4, the volume was relatively high. You can see that the volume at point 4 expanded, especially considering its position near the potential top. On the other hand, at point 5, the volume decreased. You can observe the pattern during each upward movement, such as at points 2, 4, and 6. The volume tends to increase. On the other hand, during pullbacks and corrections, like at points 3, 5, and 7, the volume decreases. This pattern indicates that during uptrends, there are significant volume spikes, while during downtrends, the volume contracts. Based on the current situation, it does seem to fit this pattern quite well. You can observe that during both the uptrend and the downtrend, we exhibit a pattern where when the price is falling, it's merely a correction, and the volume tends to decrease. However, during genuine upward movements, we experience significant volume spikes. However, it's worth noting that the yet-to-appear points 8 and 9 occurred during the uptrend movement. Not only points 8 and 9 but also point 10, which represents a blow-off top, aka a buying climax. Hence, during points 8, 9, and 10, the volume continues to increase. Nevertheless, currently, as we progress, the volume is gradually decreasing. Now, we should be at the position of point 8. But we haven't seen a significant surge in bullish volume yet. So, I think that in order to match the described scenario, we must witness a burst of consecutive bullish candlesticks with substantial volumes in the near future. Otherwise, as of now, the volume is gradually declining, especially in the bullish case, where the volume seems weak. It would be challenging to replicate the model illustrated by Livermore. Well, we can also explain the latter part here. There's a section of text that reads, "Test before selling short." This indicates that afterward, the trend turned bearish, which means the trend has reversed. By that time, when the price drops, we'll see an increase in volume. For instance, at points 11, 13, and 14, the volume is on the rise. Why? The reason for this is the downtrend starts as the primary trend during a rebound after a pullback, creating a lower high. These are rebounds during a price rally. Hence, point 12 will exhibit a decrease in volume. So, this situation can be explained using the relationship between volume and price. Currently, we haven't observed any significant increase in volume. So I believe we might need to wait a bit longer or consider a different perspective. For instance, if we encounter bullish candlesticks with large volumes, in this position, I am confident that it could lead us to the model described by Livermore. Okay. Looking at the daily chart, we can see that we are still experiencing decreasing volume. From a certain angle, it seems like the price is closely hugging the lower boundary of the box pattern. Regarding this scenario, I don't consider a decisive breakdown. In a good breakout scenario, the price should completely move away from the previous range. After a downside breakout, a good downside breakout should not involve lingering around similar price levels. Otherwise, it wouldn't be a good downside breakout. A good breakdown or breakout should be like this. For instance, we originally had a range-bound consolidation at the lower end. A good breakout would be a situation where the price breaks free decisively from this consolidation zone, completely leaving it behind. This breakout should be clear and distinct, with no retracement back into the previous price range, as we are currently experiencing. Okay. Now, let's switch to the 4-hour chart. Here, we can observe the potential formation of a wedge pattern. You can observe it here. Some people, well, this is my drawing. Like this. I reckon the wedge pattern should be like this. But some people may draw it differently. In my opinion, their way of drawing is incorrect, because it leaves too much empty space in the middle. When a pattern has too much empty space in the middle, it is likely to be invalid or forced. I reckon the correct way to draw it is like this, with no other valid options. However, determining whether it is correct or not depends on various perspectives, such as the touch points and the empty spaces. Currently, it appears to be valid. You can observe that after the downtrend, the bears didn't sell consistently. It started to decrease as we progressed. Also, focusing on the present trading range, you'll notice that the bottom is gradually rising after being tested. It's forming a higher low. The lowest point hasn't been revisited, whereas at the top, there have been multiple tests. As a result, the situation seems to be gradually turning less favorable for the bears, especially for those who have shorted it. If you entered a short position when the price broke down, I would suggest that if the market manages to reclaim the upper range, specifically around 29,700. The bearish position might become risky. Alright. Let's switch to the 1-hour chart. Here. The most crucial aspect at the moment is whether we can reclaim the S/R reversal level at the upper range. If that happens, I believe it will serve as a line distinguishing between bullish and bearish trends. To continue the bullish trend, we'll likely need to witness another substantial surge in bullish volume. Otherwise, opportunities might be limited. Alright. Thank you. You're welcome to like my videos, subscribe to my channel, and share my videos. Turn on the little bell button to show me your greatest support. Oh, one more thing. If anyone is interested in opening a trading account with Bybit, I warmly invite you to click the link below. Upon depositing $100 and completing KYC, you'll receive a free Bitcoin contract worth $1,000. So why don't you sign up? The positions in the account are genuine, and after your positions gain profits, you can close and withdraw them. So, I truly welcome everyone to register using my Bybit link. Also, join my WSOT team. Thank you so much. Bye-bye.